Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Friday and it's the 24th of November. My name is Russell Shaw. I'm a senior market specialist at FXCM, and my email address is rshaw@fxcm.com. Just going to go ahead and bring up our disclaimers, and I'll start off with our high-risk investment warning. I'll keep this on screen for you guys for a few moments. Good morning, Matthijs. Nice to have you on the webinar. Hello, Raj, David. Pleasure to have you. Good morning, Kim. Welcome. Hey, James. Thank you for signing in. Let's just bring up our market commentaries disclaimer. All right, so yesterday we had a slow day, right? It was Thanksgiving in the US. There was a public holiday in Japan. Today, there's still going to be thin trade. Okay, the US markets are open, but they only open half day. I think the stock markets open until 1 p.m. Eastern time, and I think the bond markets open to 2 p.m. Eastern time, subject to correction. But regardless of that, a lot of traders take the Friday off and have a long weekend. So again, just be aware that there is less liquidity today. It's definitely something that you need to be aware of, because when there is thinner trade, it increases the volatility. There's less smoothness to the price movements. Here's our references: Market Scope and Trading View. And we'll just take a quick look at the roll rate, this Trading View. This is the weekly chart. So just want to maybe let's go daily here. And we've got the head and shoulders that we are potentially looking at. Here's the shoulder, here's the head, here's the right shoulder, but it's not completing. Can you see it's kind of turned up here? We've got support here. Got here that so there does seem to be at least a temporary floor to where to which way the a temporary floor underneath the real rate. That's a bit concerning to me, because it could suggest that we are starting to move in type of a direction. So we start going laterally, and if we start going laterally, that sort of lateral movement filters down through to other instruments. That's going to be tough for us as traders. If we start moving laterally, then potentially US dollar starts moving laterally, and if US dollar starts moving laterally, that filters through to the other instruments, right? So the head and shoulders not completing at the moment. We'll just have to keep an eye on it. That's what we can only do. But now we need to watch if we get this lateral movement. Now, if we are moving laterally in the real yield, let's just take a look and see what's happening on the US dollar here. And you can see that the US dollar has got some sort of support that's kicked in. I think that we still take our cues off of the technicals. What I mean by that? Well, we are still below the 30-week exponential moving average. That exponential moving average is starting to curl down, and the RSI is below 50. So this is it's a weekly chart. So we saw this yesterday, and if we go through to the daily chart here, now remember we're going to have a less liquid market today because of the half day and the long week, the Thanksgiving long weekend, essentially. That makes trading tough, but we do have the series of low peaks, lower troughs, low peak, lower troughs. Yesterday's price target. If I just take this out, let's just bring in an arrow here. Okay, so this is yesterday's candle. You can just see it's an inside candle. It's inside the range of the day before, so there's no real force upwards or downwards here. It's inside. It's a candle of uncertainty, and the idea that it is a candle of uncertainty, I think, just makes sense given the long weekend. Well, today is also an inside day. Look, we've got clearly the rest of the day left. We're right early in the morning, but it is inside yesterday's candle. So it's just 2 days of uncertainty. And why that makes it sort of tough for us is because what we're looking for here is we're looking for that lower peak. So we wrote in here LP question mark. We're looking to see if we can get that lower peak in, but the lack of liquidity and the heightened volatility making it a bit tough for us. The RSI is below 50, but so we're kind of looking for some sort of movement this way. I just don't think we're going to get the swing given the longer weekend. Anna's just written, might as well take a long weekend too, and I think that's valid. If we just go through to the US dollar here, this was the wedge. We put in this wedge. It kind of played out. I don't think that it was the greatest completion of a pattern. No, so let's just take this out. What we can do is look at the central pivot. That is where the current resistance level is, at the central pivot. But just take a look how it's moved sideways. There's really been nothing here, for the last 24 hours, right? So it's exactly what Anna's saying. May as well take a long weekend too. It's something to consider. But you can see we've got this lateral movement here, and here is the resistance. It's this the central pivot, and we've got this sort of I don't know. Well, this is the resistance. This is the key level. What we want to see is, do we get the movement to the downside here? We've already got the stochastic showing signs of declining momentum over here. So just some sort of angle and separation in the EMAs off of this resistance level. We'll see it as sort of a key resistance level. But then the big question, this is the big question, and my thinking is that it's not going to get through to the lower quintile because of the lack of liquidity. But if it does make it through to the lower quintile, then of course we may have the momentum behind us. We may see the push. I just don't see it happening today. It's important for the stochastic to make its way to the lower quintile and hold. We've seen this many times before. So you can see here is the stochastic making its way to the lower quintile, and you can just see there's the push, there's the swing. Okay, so we kind of caught in no man's land here, right in the middle of the stochastic. That's not surprising given that the US dollar is moving in this lateral position. But let's just see, perhaps the EMAs cooperate and show some angle and separation. So if the US dollar is moving southwest, should we look at other cross pairs? You can look at other cross pairs. We tend to analyze the majors here. The truth of the matter is, Kim, that a big chunk of the liquidity comes from the US side, And the fact that we've got this long weekend, I think is going to affect trading generally. So, I mean, you can take a look at the other cross pairs. Again, my personal opinion, my personal preference, as Anna says, might as well take a long weekend as well. But of course, if you have any cross pairs you're looking at, I'm happy to take a look at them, and we can do the same sort of analysis. Remember, it's the majors that are the big players anyway. You know, the big movements are in the majors. So sort of you start going cross currencies, you're really taking a look at less liquid markets. And if you go exotics, well, then you're looking at very volatile pairs, right? Let's take a look and just see what happened with the euro yesterday. It was looking positive as we when we analyzed it on our webinar yesterday. Again, you know, here is the movement up. Here is the stochastic moving up, but we don't get into that upper quintile. It doesn't hold in that upper quintile. It doesn't hold in that upper quintile, right? Well, if it doesn't hold in that upper quintile, we're not going to get the swing. So we just get the sideways movement here with some volatility around. Well, that volatility, that's not surprising. Why is it not surprising? It's the long weekend, right? So you can see how the long weekend impinges on our trading. It makes absolute sense. There's not much we can do about it. You can't really fight against it. It's just the way things are. Let's take a look at gold. Gold to me is a fascinating chart. Subdued liquidity, absolutely, Raj. Let's just take a look at the gold chart here, because we are at the psychological level. Again, liquidity affecting us, no doubt about it. You can just see the sideways movement of you can just see the sideways movement. See, nothing really happening there. But look at the price. We're at 1993, $1,990 per troy ounce. That's pretty close to that 2000 level. Let's just go through to the monthly chart here. No, Black Friday has got very little to do with. Black Friday is, so James asking, does Black Friday make any difference? My opinion is not, James. It's good if you're going to sort of shop at at retailers. Sure, retail therapy, great for Black Friday. There's no bargains on the foreign exchange market. Absolutely no bargains. So the idea here is that, in my opinion, the liquidity is going to be thin. Okay, and you can see. Take a look at the monthly chart here. We're right by the psychological 2000 level. This 2000 level is really, you can see the market is just paying attention to it. We're on the monthly chart here, and you can see it's hit it once, it's hit it twice, hit it 3 times. It's now attacking it a 4th time. Is just the 2000 level is looking quite strong. It's formidable. Now, what I'm worried about, if we get that sideways movement in the real rate, then I think that 2000 level becomes extra strong. Right? We really want that real yield to come down. If the real yield comes down, then the opportunity cost of holding gold. You see, gold doesn't pay a yield. So when the yields come down, then the opportunity cost of holding gold comes down. Then potentially we can break that 2000 level, but that 2000 level is looking quite strong. What is interesting, I think we are going to attack it in a serious manner over sort of the next couple of months, next couple of weeks. Problem, of course, we're heading also into the end of the year. Christmas, New Year is going to be subdued trading. We'll see if December is meaningful for gold. But just take a look at the candle for this month. It's a good-looking candle. It is an inside day. I prefer to see it take out last month's high, but price of gold did decline. It hit the low for the month. That's when bears lost control and gold bulls have really pushed it back up. So I think that they are setting to attack that 2000 level again. I am of the opinion gold is a good instrument to put on our watch list. You can see that the monthly chart has the green 5-month EMA pulling away from the orange 10-month EMA. You can see that the RSI is looking positive above 50. We've got this staunch resistance above us, no doubt about that, so we've got to keep an eye on that. I don't know how it's going to, I don't know the trajectory, I don't know how much higher it's going to go, but I'm of the opinion it's good to keep an eye on it, keep an eye on the watch list because of the way it looks as if it's going to attack that 2000 level again. Whether that 2000 level falls or not, gee, that's going to be very interesting indeed. All right, let's take a look at one more chart. We'll take a look at DAX. All right, just bringing up DAX. Bear with me for one moment. Okay, here's DAX. DAX had a terrific month. It had a terrific month. The monthly chart here, I think, is quite insightful. I just want to zoom in here. Look here. It looks as if we've got a reference candle reversal there. We've got about a week left in. It looks like it's going to close above last week's high, and that's sort of the next higher trough. That's the next higher trough. On a monthly scale is pretty significant, right? So, Raj saying it's an engulfing candle. Yeah, I mean, the engulfing candle, I like looking at it in terms of reference candles, just because the reference candles, to me, highlight the turning points. And the idea is, you can just see it's a really strong looking candle. We'll go through to the week, and of course, it's above the 30-week moving average. The 30-week moving average turned up nicely, and it's in zone 1. The one worry, I just think it needs to stabilize before we start seeing a move up, just because we've had such a terrific month. Perhaps some sort of profit taking. If we get some sort of profit taking, it sets up the platform for the next leg higher. But again, I think the way that this plays out, we keep an eye on the real rate, and if that real rate shows an inclination to drop further, I'm not sure that's going to happen before sometime next year. We've just got to see how the economic data comes in. If we see the economic data coming in suggesting that without capitulating, when I say so, if we see inflation coming down to 2%, we don't want to see, and we don't want to see economic activity drop. That's going to be bad for the stock markets. But if we just see some sort of more moderation in inflation, some sort of moderation in the real rate, then I think we've got sort of the legs here. This monthly chart looks exceptionally interesting indeed. Okay. Oh, that was gold that Raj was referring to with the bullish engulfing. Okay. Let's just bring that up. Okay. Sorry, Raj is referring to this candle here. Okay. Yeah. All right. So I think we're getting this this attack. I think we're setting to attack 2000 in gold. All right. We'll leave it there. If there's any questions, go ahead and type those in. Anything at all, go ahead, type those in. Otherwise, Monday, I may not be able to do the webinar on Monday morning. I haven't cancelled it just yet. If you don't get an email, we will pick up again on Tuesday. All right, guys, have a great weekend, and we shall chat next week. Thanks very much, guys.